Global markets were really rattled in October. It seemed to stem from a variety of factors: fears around trade wars, slowing global growth, higher interest rates, political developments in Saudi Arabia, and worries that US earnings may have peaked. The JSE was no exception. The all-share index closed 6% lower for the month and 12% lower year to date to the end of October. Most of the large caps came under pressure. Naspers was down 15% for the month as it tracked 10 cents lower. BHP Billiton declined 4%, British American Tobacco also 4%, Richemont 7%, and Glencore 2%. Although there were quite a few resources shares amongst October's best performers, they were mostly in the precious metals sector. A slight rise in the gold price of 2% helped gold mining shares. Some of the bigger diversified miners like Anglo American, BHP Billiton, and Glencore came under pressure, dragging the resources sector down 4% for the month, although still up 14% year to date. Once again, industrial shares were the worst hit, dropping 9% for the month, taking their year-to-date number to a 21% decline. A big contributor to that was the fall in Naspers and Richemont. Finally, financials declined by 5% for the month, bringing their year-to-date performance to a 12% decline. Heavyweights such as FirstRand, Sanlam, and Standard Bank Group were all down between 5 to 7% for the month. On a macro front, South African CPI was flat at 4.9% year-on-year. Core inflation, which excludes volatile categories like food, beverages, and energy, was unchanged at 4.2% year-on-year. The Rand was down 4.6% for the month as the medium-term budget policy statement and Moody's reaction to it weighed on the local currency. And year to date, the Rand is now down 16% to the end of October. Turning to politics, Finance Minister Nene exited his position after he revealed he had visited the controversial Gupta family at their home several times between 2010 and 2014. President Ramaphosa announced Tito Mboweni as the new finance minister, having the unenviable task of presenting his maiden medium-term budget policy statement soon after being appointed to the position. It revealed a weaker local fiscal outlook and painted a somber picture of South Africa's finances. Moody's, the only one of the three major ratings agencies that still assesses South Africa at investment grade, described the budget speech as credit negative. There was some good news at the end of the month at an investment conference held in Sandton when President Ramaphosa announced a combined amount of 290 billion rand in investment for the local economy.